Imagine a world where sending money across borders is as straightforward, as instant as sending an email.
Right.
That's a vision Jeremy Allaire articulated, and it really kind of hits at the heart of what we're exploring in this deep dive.
Mm-hmm.
We've sifted through some, fascinating recent developments, and today we're focusing on two that could fundamentally reshape how money moves around the globe.
Yeah, and maybe even how central banks operate.
Exactly.
We've got two really insightful pieces from PYMNTS, both published just this week, actually, in May 2025. They give us a pretty tangible look at this evolving financial landscape.
Okay.
The first one, from May 21st, it details the launch of Circle's new cross-border payments network.
Right, Circle.
Yeah, aimed at making international payments using stablecoins much more efficient and accessible.
And then pivoting slightly, but it feels related.
Yeah.
The second article.
Yeah, the second one's from May 22nd. It discusses a fascinating study by the Bank for International Settlements and the New York Fed.
The BIS and the NY Fed. Okay.
Right. And this research dives into how central banks might leverage, the power of smart contracts to streamline their operations.
Streamline how? Making them faster.
Potentially become more responsive, yeah. More agile, maybe, in managing monetary policy.
So we're looking at both ends here. The immediate impact on everyday and business payments.
Mm-hmm.
And then this longer-term potential shift in how central banks actually function.
It's a really interesting intersection, isn't it? You've got innovation, how digital assets are being applied in really practical ways right now.
Today, yeah.
And then how this cutting-edge tech could transform the core financial infrastructure down the line.
Okay, let's unpack this then, starting with Circle's new venture.
Sounds good.
The article highlights the launch of the Circle Payments Network, CPN they call it. Announced last month, went live basically yesterday.
That's right, May 21st.
Now, for someone listening who maybe isn't, totally immersed in digital currencies, could you give a quick rundown? What is a stablecoin and why is it relevant here?
Absolutely. Yeah, good question. So think of a stablecoin as a type of digital currency, but one that's designed to hold a stable value.
Stable how?
Well, it's typically pegged, meaning it's linked, to an existing government-backed currency. Like the US dollar is the most common one.
Oh, okay.
So the idea is you get the speed and efficiency of digital transactions.
Right, blockchain benefits.
Exactly.
Yeah.
But with the price stability we're, used to with traditional money, not the wild swings you see elsewhere.
Gotcha. So that makes them useful for actual payments.
Precisely. You avoid that price volatility. So yeah, very interesting for payments.
Okay, that makes sense. So CPN is all about using these stablecoins for cross-border payments. What's the network actually trying to achieve?
Well, at its core, CPN wants to make cross-border payments using stablecoins pretty mainstream.
Mainstream, okay.
Yeah, it's essentially a network, right? And a set of rules, protocols that let different financial institutions, banks, FinTechs, communicate payment instructions and settle transactions using public blockchains.
So they can talk to each other easily, even if they use different systems.
That's the key. Interoperability. That's the kind of the magic word here, making it easier for all these different players to connect and transact smoothly.
Like different phone networks seamlessly connecting calls, maybe?
That's a pretty good analogy, yeah. CPN wants to do that, but for financial institutions using stablecoins.
So potentially ditching the old, sometimes slow, sometimes opaque international wire transfers for these stablecoin transactions. What are the big advantages Circle is shouting about?
They're pointing to several pretty significant improvements. Interoperability, like we said, that's key.
Right.
But they're also heavily focused on compliance.
Important.
Crucial, especially with the regulatory landscape around digital assets still, evolving everywhere. That's vital for getting broad adoption.
Makes sense.
And beyond that, they're promising much faster transaction speeds, maybe near instant settlement in some cases. Wow. And importantly, greater cost efficiency, getting away from some of the fees you see with traditional cross-border methods.
The article actually gives some really concrete examples of companies already using CPN.
It does, yeah.
Can you give us a feel for who these early adopters are? What are they actually doing with it?
Sure. So Alfred Pay, for instance, they're using CPN to provide stablecoin to fiat off-ramps.
Off-ramps meaning converting back to regular money.
Exactly. Cashing out, basically. They're doing it in key markets like Brazil using PIX and Mexico via SPEI.
Okay.
Then you've got TazaPay. They're focusing on compliant fiat payouts into Hong Kong. That can often be a complex area.
Right.
RodoPay is enabling USDC-based payments directly into Brazil, and Conduit is tackling the other side, the on-ramp.
So getting money in.
Right. Allowing businesses in the US and Europe to convert their traditional currency into USDC for B2B payments going into Mexico.
These are all very practical, aren't they? Specific use cases.
Very much so. They really highlight the immediate utility, addressing real pain points.
It makes the whole concept much more tangible. And that Jeremy Allaire quote you mentioned earlier, moving money as simple as sending an email.
Yeah.
It feels like CPN is a really direct, significant step towards actually doing that.
Precisely. Yeah, I think that's fair to say. And, this move by Circle, it's not happening in a vacuum.
How so?
Well, it reflects this broader trend we saw reported back in March. Stablecoins are sort of decoupling from just being crypto exchange assets.
Right, they're moving beyond just trading.
Yeah, they're becoming integrated into the actual plumbing, the infrastructure of the financial system. It's less about speculation now, more about finding real utility.
Practical uses in everyday finance.
Exactly.
And cross-border payments does seem like a really a prime area for this kind of innovation. Why are stablecoins such a good fit there?
Well, if you look at the research, like the stuff from PYM, NTS Intelligence, and Citi, traditional cross-border payments often struggle, right? Slow processing times.
Days sometimes.
Yeah, days, lack of transparency, where's my money, what are the real fees?
Right, the hidden costs.
And ultimately, higher costs overall because there are so many intermediaries involved.
Yeah.
Stable coins running on blockchains, they offer the potential for, near real-time settlement in many cases, much greater transparency because of the public ledger.
You can see the transaction.
You can track it. And potentially lower fees because you might cut out some of those middlemen.
So the key takeaway, the main point on the Circle Payments Network, it's live, it's operational, and it's trying to fix real-world problems in international money movement using stablecoins.
Exactly right. It's not just theory anymore. It's actually being used out there in the market.
Okay.
Now, shall we shift focus to the other side of the coin, perhaps?
Let's do it. Central banks. So the second article, this research from the New York Fed and the BIS Innovation Hub. Project Pine, they called it.
That's the one.
What's the core idea they're digging into here?
So the central idea is exploring how tokenization and smart contracts could potentially revolutionize how central banks implement monetary policy.
Revolutionize? How?
Well, the key word that jumped out in the article was nimbler.
Nimbler.
The idea that these technologies could let central banks react more quickly, maybe more efficiently, to changing economic conditions.
And it's crucial to clarify, right? What kind of assets are they talking about tokenizing? This isn't Bitcoin for central banks, is it?
No, definitely not. That's a really important distinction. This research isn't about central banks issuing like a general purpose CBDC for you and me, or directly using existing stablecoins like USDC.
So what is it about?
It's looking at creating digital tokens that represent existing money and assets within the traditional system.
Like what?
Like the reserves that commercial banks hold at the central bank, or commercial bank deposits themselves, even government securities.
So taking the current building blocks.
Exactly, the traditional stuff, and just representing it in a digital tokenized format on some kind of shared ledger.
The article mentions this bigger picture question, with money getting more digital, with decentralized finance bubbling up. What does that mean for regular banks, for central banks?
Yeah, it's prompting these fundamental questions everywhere. The regulatory side is still fragmented. Some banks are exploring their own digital currency ideas.
It's complex.
Very. But there were a couple of interesting quotes referenced. Rob Hunter from the Clearinghouse back in 2022.
What does he say?
He basically suggested, why shouldn't traditional banks use new tech to do their core jobs better? It's about evolution.
Makes sense.
And Jim Cunha from the Boston Fed, even earlier, 2021, highlighted how blockchain could enable smart contracts for moving value more efficiently.
So these ideas aren't brand new, but the tech is maturing.
Precisely. It shows this isn't necessarily about throwing everything out, but about modernizing existing systems.
Okay, so getting back specifically to Project Pine, what did they actually find when they tested using smart contracts for central banking?
Well, the core finding was pretty positive. They found that central banks could indeed use smart contracts to more easily and more quickly set up or adjust the tools, the facilities they use to implement monetary policy.
If everything's tokenized.
Within that tokenized environment, yes. And this could potentially lead to better management of liquidity in the financial system and a greater ability for the central bank to respond swiftly, maybe more precisely, when things get uncertain economically.
Can you give an example?
Sure. Imagine being able to tweak interest rate policies almost instantly, or roll out an asset purchase program where the rules are pre-programmed into a smart contract.
Triggered by certain data.
Exactly. Triggered automatically by specific economic indicators hitting predefined thresholds much faster than current processes might allow.
That does sound like a potentially big jump in operational efficiency.
It could be, yeah.
The article talked about a tokenized toolkit that Project Pine built. What was in this toolkit?
Yeah, so this toolkit was basically their working prototype. It showed how smart contracts could automate various standard central bank jobs.
Like what kind of jobs?
Like automatically calculating and paying interest on the reserves commercial banks hold, or managing the mechanics of asset purchase programs, buying bonds, essentially, or executing swap agreements between different institutions.
Things that are critical but maybe currently involve more manual steps.
Right. Routine but vital functions. Smart contracts could automate a lot of the current manual or semi-manual processes involved.
Now, they picture this system having different layers. Something about settlement and assets. Can you break that down a bit?
Yeah, exactly. So the system they envisioned has this foundational settlement layer. That's where you'd find the digital tokens representing central bank reserves.
The core money.
Right, along with potentially other digital wholesale money and securities. Then above that, there's an asset layer.
Okay.
And that contains the tokenized forms of wholesale money and securities that are actually being traded between the banks and other institutions.
And the smart contracts link these layers.
Crucially, yes. Smart contracts can be programmed with preset conditions at both layers. They automate parts of the monetary policy implementation based on those rules you define beforehand.
It's important to stress, though, like the article does, that the scenarios they tested, they always had a central bank right in the middle.
Absolute key point.
Issuing reserves, holding assets, using these smart contracts as a tool to hit their interest rate target, working with commercial banks.
Yep.
This wasn't about getting rid of the central bank, which you sometimes hear in the pure DeFi space.
Precisely. This research isn't exploring a future without central banks or like a totally new financial system. It's investigating how these new technologies, tokenization, smart contracts, could be strategically woven into the existing framework.
To make it work better.
To enhance the efficiency, the precision, the adaptability of central bank operations. It's more evolution than revolution, you could say. A potential upgrade for central banking within the familiar structure, just using some very modern tools.
Okay, so we've taken a look at these two developments. They seem distinct on the surface, but maybe they're related underneath.
I think so.
You have Circle's very immediate practical application of stablecoins for cross-border payments.
Right now, solving problems.
And then this more exploratory, maybe longer-term research from the BIS and the New York Fed on how central banks might use tokenization and smart contracts.
Yeah, looking further down the road at foundational operations.
But what's really fascinating, the common thread
is the digitization, right?
Exactly. The increasing digitization of finance just runs through both, whether it's making everyday transactions easier or managing the kind of bedrock of the monetary system.
Digital representations of value, automated processes, they seem poised to play a much bigger role going forward.
It really makes you stop and think, doesn't it, about the broader implications, from the convenience and cost savings of sending money overseas. Think about that for yourself.
Yeah, that could affect a lot of people.
To the possibility of a more responsive, maybe more efficient way of managing the whole economy at the central bank level. That's huge.
It is.
So for you listening, maybe consider these shifts. How might they ultimately reshape your own understanding of what money even is and how the future of finance might unfold?
It's definitely a landscape undergoing some significant transformation.
For sure. And these two developments, they offer just a really fascinating glimpse into what might be coming over the horizon.